All right, so within chapter 3, I want to give you kind of a little tour here of some other items that are listed, other than just, when I'll obviously post the videos, the lecture videos when I've got those uploaded. But some other things that are there for you to understand, to help you to understand. We're going to be talking about this concept called the wage base, which essentially means that and this just pertains to Social Security tax, not all wages are subject to Social Security tax. Wages that exceed a certain threshold, after that threshold, are not taxed, are not subject to Social Security tax. We're going to talk about that in a lot more detail, but here's also a video. I'm not going to show this video, but this is just something for you to access on your time. Keep in mind, the wage base that we're going to be talking about changes every year. And so this video is a little bit older. It uses the 2020 numbers, but the concept remains the same. It's just that wage base amount that is different. Some ways to reconcile. So we're also going to be looking at reporting forms that employers use to record all of these amounts that are being withheld. Those forms are called 941s. We're going to talk, there's a video up here about how to reconcile 941 forms to W-2s. We'll get to that toward the end of the chapter, but I just want to put that up there as well. Another video about ways to reconcile payroll. So just some additional stuff for you, resources for you to go through on your time. Also, I do want to, this is going to be handy to you when you're doing your homework. I have up here some steps for certain calculations. These will help you when you're doing that homework for calculation of FICA. So if you think about it, if only certain amounts, if wages up to a certain amount are taxable for Social Security purposes, but wages after that amount during the year are no longer subject to Social Security taxes, at some point during the year, that maximum is going to be reached, if you're lucky enough. Right now, the wage base is $160,200. So in 2020, well, actually, this year it's higher than that. For our purposes, we're using 2023. In 2023, that amount was $160,200, meaning that if you made more than $162,200 during the year, everything over that amount is not going to be subject to Social Security tax. That's awesome. That's a big savings. You got to make a lot of money though to get to that point. But if you made that at some point during the year, you reach that threshold. So how do you calculate that paycheck where you're reaching that threshold? That's what these steps are to help you with. Okay, steps to calculate the current period FICA taxes, and this actually can be used for at any time during the year. It also takes into account those pay periods before you reach the threshold and those pay periods after you reach the threshold. But just something for you to kind of help you out with that. And then also what we're going to be talking about is, so we're going to be talking about FICA, which is comprised of Social Security and Medicare tax. FICA is paid by employers and employees. We also have this tax called SECA. This is self-employed. It's called Self-Employed Contributions Act. But it's also Social Security and Medicare tax. But if you are self-employed, you are taxed a little bit differently. Okay, same tax rate, same total tax rate for self-employed individuals. And when we get to that point, here are some steps that will help you when somebody has a job, they're an employee, but then they also are self-employed, maybe they got a side hustle or something. That person has to calculate figure out how much self-employment tax they're gonna have to pay, and they've got to include in that how much Social Security tax they've already paid through their employer. So this is a calculation to help you with that when we get to those points. So I want to bring those to your attention, those steps are going to help you out. We'll probably come back to those when we're doing some of our calculations. So this chapter Sorry, I'm catching a cold. And so I'm getting kind of, oh, I'm supposed to show you this. All right, so since this is about Social Security, you can see I'm way behind schedule, but that's okay. Since this chapter is about Social Security, I'm going to give you a little video to watch about the history of Social Security and how it came about. It was passed in 1935 again during the Great Depression, and so there was a big change that occurred during that time, seeing so much poverty. You know, we as a nation decided that we were going to implement some social changes that would guarantee that people would not fall into poverty. Now, it doesn't guarantee that people won't fall into poverty, but that was the idea behind it. So let's watch a couple of these just to kind of give you a little bit of background about why we're watching this. All right, if we've got audio. Oh, come on. Bear with me. Please. It says it's on. Oh, wait a minute. All right, maybe we're not going to watch it. So obviously there's something with the speakers in here. So I got my volume all the way up on everything, but it's not working. All right, I tell you what, you've got access to that. You can watch them on your own. We'll just get started. Maybe it's, wait a minute. Hold on. It's only that one. I don't know. That's right. You guys can go ahead and watch that if you're interested in it on your own time. I'll give you a little synopsis. So Social Security and Medicare, we're talking about a couple different types of taxes here, and they both come under this umbrella of FICA. Stands for Federal Insurance Contributions Act. And this one stands for Self-Employed Contributions Act. Within both of these, there are two different types of taxes. There is what's called OASDI, also known as Social Security. And there's Medicare. So these are the taxes within those acts. Your book refers to Medicare as HI, stands for health insurance. I'll tell you quite honestly, I'd never heard it referred to as HI before I started teaching. So in practice, it was just Medicare. Oftentimes, I will abbreviate it as MC instead of HI. So each of these types of taxes are under this FICA and SECA umbrella. OASDI stands for Old Age OAS. Why am I not numerous? Survivors, thank you. And disability insurance. Okay. Which means that most of us think of Social Security as a retirement benefit, right? You pay into Social Security all your life, and hopefully it's there for you when you retire. It's kind of like a traditional pension, where the calculation of the benefit that you get is not based on how much you put in. It's based on your highest years of earning and how old you are how many years of credits that you have put in. At what age then that you start taking benefits. For most people, you're not gonna get out what you put into it. And that's kind of the purpose, not the purpose, but that's part of the design. Insurance is like that, right? Some people are going to get more out of it than what they put into it. Some people are going to get less out of it than what they put into it. But that's the old age part, is the retirement part of Social Security. But it's more than just retirement. It's more than just a pension for individuals who are of retirement age. It also provides some death benefits to survivors, to dependent children, for individuals who have passed away who would have otherwise collected Social Security. Survivors would be, like I said, it's dependent children and the spouses of those dependent children up until those children reach a certain age. I think it's 18. It used to be 21 or 22, and it would actually provide benefits. This is quite a while ago. Provide benefits through college. It doesn't do that anymore, but it provides a monthly benefit, and essentially that's to pay for, the individual who passed away has paid into Social Security and would have received benefits upon their death. So this is a way for those to help those survivors of that, and also to get those benefits then paid that would have otherwise been paid. Another part of it is disability insurance. The disability portion is for individuals who qualify for it. I don't have any personal experience with this, but I do know from secondhand experience that it's extremely difficult to qualify for disability through Social Security, but it does provide for those who are totally and permanently disabled a monthly benefit. So those taxes that are being withheld from paychecks for OASDI are going then to provide benefits to this program that provides to all of these different ways. Medicare is a separate tax that goes to provide health insurance to those who are age 65 and older. Also can provide health insurance to certain those who are on disability as well. So that's where all of those taxes that are being collected, that's where they are coming from our paychecks, right? All under the umbrella of FICA, or if you're self-employed, SECA. So because they fall under, both of these taxes fall under the same legislation, that's why they'll be referred to together as FICA taxes. When we say FICA taxes, we're talking about both of them, right? If we're just saying Social Security or OASDI, we're only talking about one of those taxes, or Medicare, the same. So we need to, in this chapter, we're going to look at who exactly is covered under Social Security, under FICA, and by that I mean who has to pay it, what individuals who are earning income have to pay it, and what types of employment, how we define those types of employment that are subject then to FICA taxes. Not all income is subject to FICA tax. Only what is called earned income is subject to FICA tax. Earned income is money that you work toward, affirmatively work toward to earn, as opposed to passive income. Passive income, an example is like interest income, investment income, dividends. If you are an investor in a business, that is considered to be passive income. You're not actually, it's not through your efforts. Earned income is income that's earned through your efforts, okay? And it is only earned income that is subject to these FICA taxes. We'll talk about the different types of compensation that are defined as wages for FICA purposes as well, okay? Like I said, not all compensation is earned. So not all compensation is necessarily going to be subject to FICA taxes, and there are also certain exemptions to earned income that make it not subject to FICA taxes, at least not currently. Now we're going to do those calculations, apply the tax rates and the wage base. That's what I was talking about earlier. So how employers calculate the amounts. So we've got to figure out, okay, what are wages? Well, what are employees, first off? And then what wages that the employees earn are going to be subject to this tax? And then how do we calculate that tax and collect it? And once we've collected it, what do we do with it? We have to send it off to the IRS, to the Department of Treasury. How do we do that? When do we do that? At what point do we do that? How do we report it as well? So that's what we're going to talk about in the last part of the chapter, where we talk about when to deposit these taxes, as well as then how to report the deposit of those taxes and the amount of taxes that were actually due. So that's what we're going to look at in here. All right, so independent contractor, SECA versus FICA. So every person, this is a weird wording here. So if someone employs one or more individuals in the performance of services, person refers to individual, trust or estate, partnership, or a corporation. So where they're talking about here, if a person employs, it could also be a corporation that's employing individuals. It could also be a trust or an estate, or a partnership, or some other type of entity that is employing other individuals, and they become the employer, and then the person performing the services becomes the employee. These are services, any service that is performed by those employees for their employer would be considered earned income for purposes of FICA. And they mention here, regardless of the citizen or residence. So even those individuals who are not citizens of this country but are working here, or are not residents but they're working under the regulations of FICA, they still have to have those FICA taxes. They're still subject to those FICA taxes if they're performing work that is required under FICA. There are some occupations that are specifically covered. So full-time insurance salespeople, agent commission drivers, if these are very specific, of food and beverages, or handling of laundry or dry cleaning.